If you want to retire, then steal this strategy. This is the exact strategy that I'm using to make about $5,000 every single month, and that's helped me retire my wife from being a public school teacher. I've also helped over 600 people use a strategy just like this to generate monthly income, and I want to show you exactly how to do it in this video. So the plan for this video is simple. I'm going to show you what options are if you're new to them. I'm going to then explain what option selling is. Then we're going to get into the core strategy that I use to generate reliable monthly income. We're going to talk about how to trade it by looking at the chart. We're then going to show you how to enter it on the broker so that by the time you walk away from this video, you'll actually be able to place this trade yourself and understand it. And then I'll also show you how to manage risk. There is risk when it comes to trading the strategy, and then you need to know how to manage it efficiently. And then from there, I'm going to show you how to automate it so that you can not only have the passive income, but also the free time as well. So let's dive into part number one, which is understanding what options are. So let me make my face small and let's get this party started. So here we go. Looking into it, options are quite simple. It's essentially betting on what a stock will do. So just like when you're sports betting, you bet, hey, I bet this football player will run so many yards, or I bet this person will hit a home run, or whatever it is, you're betting on a stock's performance. You're saying, hey, I think the stock will stay above this level, or I think the stock will reach this level. That's what options are. And so there's a lot of different options. We have call options and we have put options. Each one does something different. So I'm going to explain each one in the context of what we'll be using for this strategy. So if you buy a call option, you make money when the stock goes up, aka you're betting that the stock goes higher. If you buy a put option, you're making money when the stock goes down, aka you're betting the stock goes lower. I'm going to put a plus button because we're buying. Now the inverse happens if we sell. If I sell a call, I make money when the stock goes down, and if I sell a put, I make money when the stock goes up. Now, for the sake of this video, what we are discussing is option selling. So I'm going to get into that. What is option selling? Well, option selling is this, where we sell the contract. So if we sell a call, we're betting the stock goes down. If we sell a put, we're betting the stock goes up. So let's pretend like we have a stock like this and it's trading here. Well, if I sell a put down here, I'm saying, hey, I bet the stock will stay above this level. Now, this gives me a super high win rate and is super profitable. Why? Well, because look, the stock's trading here. That means that if the market goes up, I make money with this trade. If the market goes sideways, I make money with this trade. If the market goes down but stays above my level, I make money with this trade. And if the market drops crazy, then I lose money at expiration. And so that's how selling puts works, is I can make money as long as it stays above this level. And I can make sure this level is 10 to 20%, 10 of the billion, I think, 10 to 20% below the current price. You give me a huge room for margin. And so that's how you're able to do this. Now, that's for a put. If I'm doing a call and the stock's trading down, I can bet the stock will stay below this level by selling a call. And so the stock goes down, I make money. The stock goes sideways, I make money. If the stock goes up but stays below my level, I make money as well. And so this is what selling a put looks like, and this is what selling a call looks like. Now, what I'm going to get into, now that you know the basics of what each one is, I'll dive into the specifics when we get to the broker, but let's talk about the one core strategy, okay? What exactly is the strategy that I am using and I've helped hundreds of others use? It's called a strangle strategy. And so a strangle uses both the short put and the short call. So let's say we have a stock trading like this, right? And what we do is we're betting on both the bottom and the top side. So you can see here, I'm going to put a level up here and I'll put a level down here. And so I'm betting the stock stays above this level and it stays below this level. So as long as the stock stays between these levels, whether it goes up a bit or down a bit or sideways, whatever, as long as it stays between these levels, I make money, right? I make all the money from this contract and I make all the money from this contract. And so now this is what a strangle is, because you're strangling, or like, you jump on a horse and like you're straddling it kind of. You're strangling, putting in a headlock kind of, but you're strangling the stock price. And so that's what a strangle is. And so if we're going to understand this trade a bit better, let's dive into the next step of this video, which is showing you how to trade it on a chart. So a strangle takes advantage of playing a non-directional trade. So if you're looking to trade a strangle, you're looking for slow bullish markets. So a stock that is slowly moving higher. You're looking for sideways markets, so stocks that stay sideways. And you're also looking for slow bearish markets, so stocks that slowly move down. These are the markets that it works best in. And this is how I structure my strangle strategy to make sure that it does well. So here are the conditions so that you can actually go trade this. What we're looking at here is we're looking to trade it on a highly liquid asset that has a lot of tracking stocks. And so basically what I'm saying is we're looking at an ETF, okay? We're looking at something that tracks a lot of different stocks so that it's very diversified. And so the way that we do this is we can do this on SPY, because again, that tracks the S&P 500. We can try this on SPX, or my personal favorite is doing it on futures options. So futures like ES or MES, depending on your account size. ES gives you an insane return on your money, which I'll highlight here when we get to the broker section. But these are the best assets to do it on. Now, every option has an expiration date. So I like to go between 90 and 120 DTE. I'll explain why these are the times a bit more when we talk about risk, but 120 to 90 DTE helps limit my risk dramatically. Next, how do I pick the strike price? Like, how do I know which put to sell and which call to sell? Well, I like to strangle. I like to structure my strangle in a way that gives me more upside room, right? Because if we're looking at the overall market in general, the overall market trends higher. And so I want to make sure I have more room up here and less room down here. That way I can continue to run higher without it hitting my levels. If I set the same levels, then I'll probably hit the top side because the market tends to trade up. So we need to adjust for that. And so what I do is I do a 10 delta put, which again is a very far out of the money put. So I have a really high win rate because I'm far away from the stock. And then for my call, I do a 5 delta call. This way I have more room to the upside so I can let that natural upward drift of the market not affect me massively. Then again, how do I manage this trade? I manage it at a 25% take profit. So once I have a 25% profit, I close it. And then I manage it at a 300% stop loss. So this is how the trade is managed. Very simple, but it's a great trade. Now, I might be saying, oh, how do I know that? Well, here's a back test of it, okay? Here is on SPY since 2013 to now, 2024. I should say close to now, December 5th of 2024. You can see here, 25% take profit, 300% stop loss, 10 delta, 5 delta, 90 DTE. You can see right here, very consistent, very stable, uptrending strategy. You can see here, I win about $100 per trade, lose about $1,000, and I have a 97% win rate. So this is how amazing it is. If you're looking for a stable, consistent strategy for monthly income, this has worked for me. It's worked for others, and the back test also shows it well. Does not mean you're guaranteed performance, because it can't do that. If someone is guaranteeing performance, you should run the other way. But I am saying this tends to perform very well. And so this is the back test, and these are the rules. Now, how do we actually put this in a broker and trade this? So that is the next part of the video, which we're getting into, is how to trade this on a broker. So let's dive into the broker and let's actually do this. You can see here that a strangle trade actually placed for me using the automation just now that I'll explain later. But you can see here how this today has already made me $724 by using the strategy, which is awesome because it's basically been hands-free today, which is cool. And how do we do this in the broker? Because I'll show you the automation later. We do this by basically taking the exact rules that we discussed here and just plugging it into the broker, okay? So if we go to the broker, let's go to one of the assets we mentioned. For this instance, I'm going to do SPY, and then we're just going to follow what we said. Again, 90 to 120 days out in the future. So we look at these days. We have 108 days out, 122 days out, 92 days out. For this video, let's just pick the 92 days that's closest to 90. Perfect. Now, we're going to make sure that our broker is showing delta. So we can come in here and select delta. And so I select delta, I'll be able to see that. And so what I want to do is I want to find delta of 10 on the right side, because the right side are for puts. So the 10 delta here on this side. And then I'm going to find the one, again, volume. I like to change this to open interest and find the one that has the largest open interest. So about right here, 10 delta. So I'm going to sell this one. Now the call side from the left side, so I'm going to look for a 5 delta on this side. So I can, make that strangle on both sides. Here's a 5 delta. There's only one of them, so I'll take this one. Okay, just like that, this is the strangle trade, right? We have one call, one put, selling both. You can see here, my probability of profit is 83%. So I've just let this trade expire. I'll make about an 83% return. However, since I have a take profit on this trade, that then boosts my win rate up to about 97%, like you saw on the back test. So right here, we can see buying power takes about $6,000 to put on this trade. I'm going to make about $385. However, that's not my actual profit because 385 needs to be multiplied by 0.25. to give me my actual profit is to do a 25% take profit. So 25% of 385 is $96. So I'll make a $96 profit when my take profit is hit, and then I'll lose about 3x this, so about $1,000 or so when I lose. And that's equivalent to what we saw on the back test. So again, this is what we're looking at, gives me about a 97% win rate and runs very consistently. However, this is done on an ETF, on SPY. But again, if we do this on a futures option, we can get insane leverage, right? Because like I mentioned, we're making about $90.96, let's just say $100 for easy math, $100 on this trade, but we need to put up $6,000. So that means I'm putting up 6,000, I'm making 100, and that means my return is about a 1.7% return. Okay, so making about a 1.7% return on my money. Now, the fact that I'm only in this trade for 17 days is insane. I make 1.7% return on my money in 17 days and 2 weeks. This is a great strategy. Now, if you do this on futures, so again, if you have a larger account, you can use ES. If you have a smaller account, you can use MES because that'll be a tenth of the price. But for ES, let's set the exact same trade. You can see here we go for the 92-day mark. We'll select the 10 delta trade. Oops, it's buying it. Sell the 10 delta. And then we will sell the 5 delta on the call side, just like this. Now you can see here we're putting up roughly the same amount of money, $6,000, but our max profit is $2,000. So again, if $2,000 is our max profit, but we're taking 25% of it, that means this trade can make me $500 per trade. All right. So I'm going to make $500 on this trade, and I'm putting up $6,000. Now I'm making basically an 8% return on my money. So in 2 weeks, I get to make an 8% return on my money with a 97% win rate, 97% chance of this happening. That's why this strategy is amazing. It's consistent and it's reliable. And so again, now we know, okay, now that this is a great strategy, we know how to set it up in the broker and do it. How do we, part 3 of this is how do we manage risk correctly? Because that is essential. Okay, so there's some things to consider when managing risk with options, okay? Number 1 is we have market risk, okay? As mentioned before, if the market is sideways, slowly moving up or slowly moving down, this is a great strategy. However, it starts moving quickly. If we have a market crash, we could lose thousands of dollars. So what's the best way to do this, okay? To have an indicator that we use to warn us of a market crash or to warn us of quick moves. So again, there's a lot of indicators we can do. We can also trend trade. So trading with the trend, meaning that we chart the highs and lows and we only trade when we're inside that range or we're trending. So again, those are 2 ways to avoid market risk. Number 2, we have volatility risk, okay? When we're selling options, we are really subject to volatility risk because if volatility goes up, our option prices go up, which means we have a lot of losses. And so we definitely don't want to have that all the time. And so how do we control volatility risk? We do that by changing our trading size or how many trades we have on based on the risk in the market. So VIX is what we look at to determine the volatility index. And so based on VIX, what we're doing here is if VIX is lower, meaning the risk is higher, we'll put on less trades. So let's say, for example, if VIX is under 15, maybe we'll only use 20% of our account to trade with. If VIX is over 15, maybe we'll use something like 30 or 40% of our account to trade with. So that way, depending on the risk in the market, we're sizing our trading accordingly. Another way to reduce volatility risk is to go longer DTEs. So I should say longer DTEs, and that's exactly why we pick 90 to 120 DTEs. Why? Because the further out you go, the higher your win rate, because you go further away from the stock, the more credit, more profit that you get to bring in, and the less volatility risk because there's more time for the trade to work out in your favor. And so these are some ways that we reduce these risks in the market. So these are some things to consider. All right. So that's exactly how I do it. Now, for the part that you guys are going to enjoy most is how do we automate this? Okay. Now that you know how to do it manually, how do we automate it to use our free time or get our free time back so we're not staring at the screen and managing these trades all the time? Well, there's a ton of automation tools and softwares out there. My favorite is the Options Auto Trader, which I have a 30-day trial linked to down below. But again, it's super simple. Let me show you. Just click on Create an Auto Trader and you plug in all the rules I just gave you. Okay, so you click on Create an Auto Trader, you pick the strategy you want to do. For this instance, we're doing a strangles trade. We're doing it on, again, you should hopefully pick a futures asset because futures do a lot better. You know, if you have a larger account, do ES, smaller account, MES. So let's just say ES. Again, we do 90 DTE. We sell a put that's at the 10 delta. So we got that. And then we sell a call at the 5 delta. So I'll change this to 5 delta. I just plug in all the rules for how I trade it. Basically, if you don't know what an automation tool is, you connect your broker, you give it the rules to trade with, and it executes your rules for you. So right now I'm saying, hey, this is how I want my trade to be structured. And then I'm saying when I want to enter the trades. I can enter on Wednesdays in the morning. Again, my account's larger, so I do 2 trades a week. But again, you can enter whenever you want. Then again, our take profit is 25%. Our stop loss is 300%. And that's how this trade gets managed. And then how much money do I want this bot to trade with? Well, again, you should trade no more than 30% of your account, depending on where VIX is. So again, if I have a $100,000 account, then I'll use about $30,000 for this bot. Now, remember how I said we want to make sure to manage risk because that's the most important part of trading, right? Well, right here, I can enable this, and this will automatically size my positioning based on the risk in the market, based on VIX. So if VIX is higher, which means my risk is lower, I'll use all my money. If VIX is lower, meaning my risk is higher, I'll then use less money so that I'm in less trades and things like that. Now, if I also want to get out before crashes, we have a little safeguard math indicator here that you can use to prevent that by enabling this. So just like that, I removed a lot of risk from these trades. Again, it looks like I don't have enough money to put on these trades. I'll do 20,000 here for this bot, and that should be perfect. Now you can see that is how the bot is structured. Again, if we go into my live account here that you saw on Tasty Trade right here, you'll be able to see that this is the bot that's running for me. This is a new account. I just started running this bot at the beginning of this month, so it's only been running for about 3 weeks, and it's already made me over $1,000. You can see here the trade that I literally just put on today. You can see here the trade. And this trade is going to make me about $581 by the time this trade closes. You can see this one's close to my take profit as well. And this trade already closed for a profit as well. So just like that, it's managing my entries, my exits, everything for me, and generating the profit and seeing the consistent returns that we see from this back test. All right, guys, whether you automate it or not, this is the ultimate retirement strategy. So make sure to steal this and use it. Now, if you want to actually start automating as well, you can click the link down below to start your 30-day trial.